The commentary that we got out of Gap is interesting because in some ways they're trying to add some more color to the overall tariff narrative, but it's one where it seems to impact certain companies way more than others. So as a retail analyst, how are things shaking out in your mind?
Yeah, Dom, Gap has absolutely been on a tear, and you saw positive comps at the Gap brand and positive comps in Old Navy. That's been almost 8 quarters for both of that turnaround, but of course impacted by tariffs here that could potentially hit their bottom line by 10%. So that's pretty significant, and investors reacted to that. Again, you've heard from all the retailers. They're doing what they can. They've already moved largely out of China. They're trying to mitigate and cut costs elsewhere. But, there's little you can do. You've got the 30% tariff from China, and you've got 10% from elsewhere. So second half of the year, most retailers are warning, we're going to get hit here. Clearly, they're performing. They're selling at full price, while American Eagle had a big fashion miss and an inventory write-down, completely different situation.
What exactly then do retailers have to do to tell investors that their company is going to be all right, that their companies are going to be okay? Do the CEOs have to address things specifically, even though the uncertainty cannot really be resolved until we have certainty out of the administration with regard to tariff policy?
Yeah, Donna, absolutely. I think the right thing to do. Gap came out and said, here are the cards. Here's how it lays out for the year here. Here's the impact. Here's what we're doing about it. We've already mitigated half of the impact, and spell it out, and also tell us about what is plan B in terms of changing your sourcing. Can you change your sourcing? So the more information, the better. And, they certainly took a hit yesterday, and expectations were incredibly high for Gap. So, they're talking about Q2 kind of flattish sales. So that wasn't overwhelming compared to how strong their business has been.
We've talked a little about the idea that you're trying to tag winners and potential losers in this kind of tariff regime. Let's stick to the winners for right now. In the coming quarters, who comes out on top?
Right. Let's be positive on Friday morning. You saw Ulta last night. Their comps were up almost 3%, well above expectations. And, it was interesting because we know that the beauty market has slowed from its super high growth COVID rates. And I think there was also a lot of concern in the market about were they promoting, were margins going to be impacted? And the answer was no. They actually are promoting in a smarter way. There's tons of newness. They're doing a lot of exclusive brands in the store, and their traffic and their ticket was up, and there was nothing to complain about in terms of their earnings, and the stock's reacting so, and that's really continues to be one of my top picks.
All right. And then before we let you go really quickly, Stacy, is there anything to glean about the health of the consumer based upon what you've seen this earnings season?
Yes, I think, you've looked at the winners, and you call out Urban, you call out Hollister, you call it TJX, you call out Walmart. Costco's numbers were amazing. The consumer is about value at the moment. And clearly, we've heard from the likes of Kohl's saying the middle to low income consumer is trading down. They are under pressure. So Kohl's is going to offer more coupons. You never want to hear that. But again, it's like the names that are winning in terms of brand turnarounds, Gap, Urban, and of course, value, Costco, Walmart, in this inflationary environment will continue.